I'm back. I promise. I'm still alive. Let's look at a chart. Hey everybody, this is Spooky's Revenge. I apologize for the absence of videos. I've just been so crazy busy behind the scenes trying to get every other project squared away. So let's get my face out of the way and we'll just dig right in. Today I want to do some more education and speculation. So let's go ahead and look at the chart, and you can see I also have TradingView pulled up over here. And kind of what I just want to demonstrate is the fact that we don't need to ever really worry too much about losing if we just have some common sense things in place. And this is something a lot of new traders start off with, and they're very good at it. They tend to find a lot of consistency with it because it's simple, and then they get greedy, right? And that's where we get hurt. So we're just going to bring it back to basics. And I just want to show you guys on the 30-minute time frame and the daily minute. I'm sorry, not the daily minute. The daily time frame is where I draw most of the support and resistance levels. I just chose Wells Fargo because they're a high volatility stock. They have a very high beta, which means that they're just more volatile in comparison to the overall market. And it's kind of overextended now, but that's okay. I don't really mind it too much. It hasn't spent a whole lot of time up here historically, but that doesn't mean that we can't just push new highs or ultimately I don't care because I don't need to be right. And this is the cool part about just developing a system, right? So if we look at this, all I want to do is I just want to plot out some levels on the higher time frames. And the reason for that is just to give the trading some structure. Now, the market doesn't care where I draw the lines. It can't see my screen. It might feel like it can sometimes, but most of the time it's just because other people are drawing their lines and interpreting the same way, and then the algos just kind of mess you up. So what we're going to do today is take a lot of the power away from those algos, okay? And so all I've done to draw these levels here, it might look like a lot. There's like 8 or 10 levels here, but it's really not that difficult. I just kind of went back in time pretty far, and then I just drew a horizontal line. Anytime there was a kind of a pivot that was tested from both directions, maybe with some good volume. There's a lot of different strategies about this specific element of it, but I'm just going to draw some basic structure stuff where the price kind of zones, right? That's really all I care about. Like right here, you can see there's a lot of chop between here, and then there's impulses between these two, an impulse to the downside, and you can see the price turns around nice and sharp in that area. That's a defined rejection. So that's kind of what I look for. So you can see there's a bunch right here. Overall, price just kind of hangs out between these two zones. So I could probably get rid of these middle ones, but I just like to have them for you guys, right? And then if we look here, right, we got a push up, and then we got kind of this flag, right? We got a little bit of chop next to it, and then we got a little pullback, and then a springboard to the upside, okay? And all I did is I just drew a line kind of where this was. It doesn't have to be very accurate. Ultimately, remember, this is to help you. It's not to help, it's not a guarantee that the price is going to turn around there. This is just to help you understand what you're looking at. So a lot of people kind of get that backwards, and they try to impose their will, and then the stock market hurts their feelings, and they don't know how to handle it, and they lose money. So let's keep it in context here. So once I got kind of locally, like once I got up to this this part of the time, the chart, I switched to the 30-minute, and then I just kind of refined those lines just a little bit more, just to see kind of where the most common turnaround points are, and kind of where the price was rejected a little bit, where the volume is at, and things like that. And then from there, right, I got these 3 lines, and then I've got the recent high, which, in theory should just be its own line, but, we can solve that by drawing a line. Then all I did is I just looked at the 5-minute chart. Okay, that's the only thing I've done. Just look at the 5-minute chart, and all I care about on this 5-minute chart is bullish engulfing candles, because, again, if we just look at one specific thing, and that one specific thing helps us identify exactly where our risk should be, or our cutoff should be, that tells us what our risk will always be. It'll always be that same maximum size that we're willing to risk or less, okay? So I've identified the overall structure, okay? So that's step 1. Step 2, and you don't have to use horizontal levels. A lot of people like to use trends. A lot of people like to use, patterns on the higher time frames, and that's okay too. It's all the same stuff, and nobody tells you that, but it really doesn't matter at the end of the day. What does matter is you pick one that you can understand and that makes sense to you, and you can identify it cleanly. All right. And then I'm taking that setup, that structure, and I'm adding in one more step, and that is minimize risk. So I'm just taking a specific candle pattern within this setup, right? I'm in an area of value right now. The price has come back to this line, tested it, and then we've got a ideal risk reward scenario here by having a small red candle and a bigger green candle. Okay, that's all I care about. And I got a little bit of a high entry here, but again, if I'm on the 30-minute time frame, okay, this price can go all the way up to here and then higher. I'm not really going to care about, 5 cents, 10 cents, 12 cents here and there, So originally I kind of messed up my lines, but if we look at these, right, if I draw just a vertical line right here, a vertical line right here, and we're just going to look and see when the price kind of tested this area, right? We'll do the same for this in this area here, and I'll keep the 5 minute up there, but I just kind of want to look around and see kind of where the touch points are before these violent rejections, because this isn't the first time this has tested it historically. It's done it a bunch in the past. That's why that level exists. We can also draw a level right here, right? Because if you look, you've got a rejection here, and then it acted as support multiple times here, and it pushed up through that zone. So what I'm going to do now is I'm going to zoom all the way out on the 5 minute, and I'm going to show you guys the potential here if we can just follow some basic rules. So if I were to draw that vertical line, okay, so this one right here on the higher time frame, if I were to draw this line, and then I come back here and I only look at things like this, for example, like you see how stupidly small this risk is right here? If I just draw the line, or a tool right here, okay, a drawing tool, long position, okay, and then I put the stop loss like 1 cent below the lower of these two candles, and then I set maybe you could do like a 1 to 5 in this case, to lock 75% of that profit. You've got that, but you've also got the remainder of this range, right? Because in theory, it should push all the way up through the range. And if it doesn't, that's okay, because you can just try again until it happens, right? Or it's going to fail the range, and then you can, look for a different opportunity. So let's go ahead and see how this one would have played out. Okay, and you can always lock profits along the way. And this is something else a lot of newer traders kind of mess up, is they don't take profits that are there. And one easy way you can do this is every time you get a low like this, where it's 2 candles to the left, 2 candles to the right that are validated, you can put your stop loss right here, and then the next time it comes back to that level, you stop out, that's your profit. And then you get another higher validated low right here, you can put your stop loss right there. So you probably would have stopped out right there realistically if you, or you would have taken some profit, I should say. All right, and then if we just be patient, right, we can see that in this case, it would have stopped right here, right? So the rest of the position would have stopped out, blah, 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 doesn't matter, right? Now, once we're out of that trade, we can just look for the price to reclaim this area above this level. So here is not a bullish engulf. Here's not a bullish engulf, right? Because we need the price to break over the red. Here is a bullish engulf. So let me just draw another tool right there, right above the open, and then right below the low of those two candles. And then again, we could do like a 1 to 5. Okay. And again, it's not a guarantee. These are, they're not going to hit 100% of the time. In this case, this one just stopped out because we have a 1 to 5, and that's okay. But look at how small this loss is, right? You're risking 12 cents here, and you're risking 12 cents here. Realistically, you're looking at several dollars worth of profit potential. So, I'm okay risking 12 cents. And all you got to do is just, be patient and let the opportunities present themselves to you. So again, I'm just going to look for areas, for opportunities within this zone. And I'm doing this live. I haven't looked back through these specific ones yet. We're just going to look, and my lines kind of change every time I do this, so it's okay. So we've got a level right here, right? These candles fully exist above the support line. So let me just go ahead and draw this. Okay, because the price did break over this, the open of that candle. Okay, and if you're more comfortable, you can always use the right below this range here as your stop loss too. That's always an easy way. So in this case, you would have stopped out immediately for 5 cents. Not a big deal. All right, and then this right here, these candles don't really exist above the level. You could kind of justify it, but I don't like it. So we're not going to do that because that's not back testing with integrity. That's just kind of justifying it because I see this. And that's what a lot of traders kind of mess up. In this case, these are a little bit high, right? This is 50 cents above. That's almost 10% up at this point or more. So we don't really want to chase that. Okay, I really want to get stuff really, really close to this line, and I really want to have those super tight risks. So we can let that one pass. Okay, whether or not it hits is irrelevant, but price comes back down and it retests this area, so we can look for some opportunities here. And if you'd like to wait for the candle to close for your engulf, you can. I personally prefer the tighter risk stuff, or the more aggressive stuff. So we're just going to put our stop loss right there and our 1 to 5. Okay, 1 to 5, and then I'm just going to extend this out. And again, I haven't like tested these in this way, so don't crucify me if these are a bunch of stop outs. It's just the strategy that I'm trying to demonstrate here. All right, so this one would have stopped out right here, and then this candle didn't break over, so we didn't get a bullish engulf on this one. So we just got to move on to the next, wait for the price to come back up to this level. We've got one right here. So let's go ahead and draw a tool, right? And this is an important part of just being a trader, is learning how to back test. 1 to 5, and at this 1 to 5 take profit, I like to lock about 75% of the position. That way we're just guaranteed a profit. So in this case, if we just added all this up, okay, we would have had some profit locked here, right? But we'll ignore that. Let's just say that this was a straight loss. You've got 7 cents worth of loss. Then you've got 12 cents worth of loss. So that's 19 cents worth of loss. Then you've got 5 cents, so 24 cents total so far. And then you've got 20 cents, so 44 cents worth of loss so far. And then you've just locked 75% of a 55-cent profit. So it's already kind of balanced out. And then you just kind of have to see where the rest of it goes. So in this case, the rest of your position would have stopped out right here on this break, okay? Which in this case, you know, you could just justify staying back in, or you could re-enter, but we don't have to, right? That's the whole point of this. We don't have to really care about winning or losing or jumping back in on the same candle. We can just wait for opportunities that are near a support level that have minimal risk. So in this case, you know, this is a little bit up. We could grab this one. You know, let's go ahead and we'll just play it through, right? Just like we would. So there's the color change. There's the stop loss, 1 to 5 risk reward. Okay, and we would have stopped. And then we got this guy. Immediately after that, we got another engulf. Right, stop loss 1 cent below there. Now this one's kind of below it, but the candle itself, both candles exist above this. So I'm okay with it. And I promise I'm not saying that just because we have this stuff over here. I'm not that cheesy. But you would have locked in 75% of it right there. And then the remaining 25%, you'd really want to get up into this level. And that, in this case, is what happened. So let's say it broke right there, right? Just kind of touched that level. All right, so there's a $3.30 profit just on that one trade, right? Per share. Okay, so, you know, you've got maybe 44 cents worth of losses. You know, a good chunk of the 55 cents locked in is 75% of that as profit. Then you've got another 13-cent loss right here maybe, and then you've got a $3.30 profit. Just by trading the range, you're just not choking yourself out super early. And, you know, if this was a little bit borderline, like let's say you don't like the wicks, you can just grab the next opportunity or let it pass, right? That's the whole idea here, is we don't need to grab every single trade. And then right here, we're above the level. Okay, there's a nice easy entry right there if you like that stuff. And you can always, again, you can put the stop loss right here at the level. That's okay, that's just personal preference. I'm not going to do this out to 1 to 5 here because A, it doesn't hit, because I already look to the right. Well, I guess I'm gonna. All right, so in this case, we would have stopped out. And then, you know, we've got a potential entry up here, but again, that's a little far up. I don't really like these too much. I really, really like them down here. So let's just see if we get one. Okay, that's it's a little close. I don't like it though, right? It's not really an engulf, and it's kind of got a wick dip there. This I like. I like this a little bit better. Now the risk is a little bit wider on this one. But we can still play ball with it. Now this is the risk right here, and of course you can always put it up right underneath the red candle itself. You don't necessarily have to use all 3 of the candles. Just choose the last red candle, and you can use that as your stop loss. But again, that's personal preference. It depends on what you're trading and how you like to trade. I think I'm just gonna have to scale over here to get that to the 1 to 5. Sorry guys. All right. Okay, so 75% of the profit would be locked right here, and the remainder of it would go up into the next channel, or you can just, you know, identify things like this, like these higher lows here. It's validated. You can move your stop loss up right there, and then as soon as that price comes back down, which in this case it doesn't, so, you know, you get higher lows here and there and there and there and there, and then you got one right here. So maybe you stopped out right here for your last piece, you know, or maybe you're just holding it up into the level. I mean, it looks like it's got a pretty good chance of getting up there. So let's see where it goes. There we go. So this one would have hit as long as we didn't, you know, choke our profits out early and stuff. and that would be another $4.26 per share profit. So I'm not going to go through the whole chart like this, but you guys can see the difference here. You know, area of value. Sorry, let me just start fresh because this is kind of it's a 15-minute video. I don't want to make this too long. But the process is very simple. You identify your structure on the high time frame. You just plot out your levels where the price turns around. Ideally gets tested multiple times in both directions. Blah, 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 right? We've all kind of been through the support and resistance rodeo. We teach it in the Pennybois University. If you don't understand that stuff, you can always join there. That's something I believe we teach for free. And then within those areas of value, when the price comes back down to that area of value, okay, all you're doing is looking for some sort of confirmation, some sort of pattern that has minimal risk and trading that effectively. And that's it. That's all you have to do. And then you just do that over and over and over again and let things breathe appropriately, lock in your profits, you know, and I'm speaking generally here. I can't give you guys financial advice, but I'm just kind of walking myself through how I do it. And you can see, you know, you're going to have your ups and downs, but if you focus on just minimizing that risk, like right here's a beautiful opportunity. Okay. Just recently, I'm just grabbing the most recent one here. If I just looked at that level and I locked, you know, maybe half here, half at the 1 to 5, you know, half at the level, right? That's automatically 77 cents profit per share. Okay. Then I come up here. I don't really have an opportunity here. I don't really have one here. I do have one right here. Okay. So I could just draw one here. Trust me, I've done the math, guys. It's it's disproportionately profitable if you do it the right way. And then, you know, maybe this one would have stopped out right here. That's okay, right? You just wait for the next opportunity. You got one right here. Okay. And you would just currently be in that one. So I got a higher fill, right? But, you know, you've got a 1 to 5 target right here that you can lock in 75% of the position. And you've also just got the rest of the range ideally selling just inside of that. So around the same spot should be a good target for that one. So I'm personally just looking to catch a 50-cent profit off of this. I'm sorry, not 50 cents. What do I have over here? I've got it at 61.28. So I expect about 50 cents. So roughly 50 cents profit on this one. I'll lock in 75% at 61.70. And I plan to do a lot more speculation on this portfolio. This is the larger one, so it doesn't really matter as much as far as the main project goes, because the main project is to get that $500 account up. And that one's it's just growing. I don't have to mess with it too much. But I do also understand that a portion of the viewers here are interested in speculation, so they can kind of build on top of the passive growth. So I plan to incorporate a lot more of this stuff. And, you know, I'm probably going to be using some pretty heavy dollar sizes. If you're on a smaller account, it might freak you out a little bit. If you see bigger numbers, like 5 digits. You know, don't let that affect your decision making and your mindset and your trading habits. These are all percentage based on, and I have a higher risk tolerance. So I'm going to take bigger risks. I'm going to get bigger rewards. It's not to show off. It's not to, you know, to rub anything in anyone's face. It's just because I have more experience and I can do it. If you're someone who's brand new, you can just as easily, you know, just use a different strategy altogether, and you can come up with something like this. You know, maybe you've got, you know, just take 100 trades and document them, right? So in this case, starting on October 30th, 100 trades with a 50K account, you know, that yielded about 11% with a pretty rough process. This is not the strategy I just showed you guys. It's a completely different one. But you can see with a $50,000 account, you get about $5,000 or 11% profit. If I bump this down to a $1,000 account, it's still percentage-wise proportional. Okay, and then if I bump it down to like $100, you can see it's still 9%. Now that's because there's some, you just have to buy fewer shares and things like that on a smaller account. But that's okay, right? You can still see, you know, 2 shares, 2 shares, 2 shares, 1 share, 1 share, 1 share. This particular strategy took a total of 98 trades, and it had a 39.8% win rate. So not the best strategy out there as far as win rate goes, but it still yielded over a 6-month period. 9.25% profit. So if you're not achieving that, it's always a good idea to just backtest until you find something that works. Put in the time, put in the effort. Don't drive yourself crazy, but just chip away at it as you can and document everything that makes sense to you. Okay. So let me close this, and we'll just, I'll probably recap this. I'll start sharing these a little bit more with the team, just to kind of show you guys how I do them. I'm also going to be live trading tomorrow morning, so you guys will be able to see that. This one I might lock in tonight though, because I do have my live trading tomorrow, and I'd rather just do it live. But you guys get the concept, right? We're just trying to capture a piece of the move from here to here, right? This is the demand zone. This is people that have cash. They want to buy shares. This is people that have shares. They want cash, so they're going to sell. People down here are going to buy. This middle part, this distribution gap, this is where we operate, okay? We're not going to control where the price turns around, and we never can. That's what 90% of traders get wrong. They always try to guess. They try to pick the bottom. You're going to hurt yourself if you do that. Instead, let the hedgies, the institutions, the billion-dollar organizations, let them control the tops and bottoms. And then all we have to do is focus on finding those super tiny opportunities, or super tiny risk opportunities within those moves, and we'll be much happier. Okay? And feel free to just backtest this. Don't feel like I'm, Pookie's cherry picking data. I'm not. I'm just showing you what's in front of me. But the process is the same. If I just pick, let's just pick Microsoft, for example, right? Here's the 30-minute chart. If I just draw some levels here, I'm willing to bet we're still going to get some bangers in there. Okay. And I'm giving you guys all this stuff for free because I just want you guys to survive in the market. Let's just draw these really fast. And then we'll just come down here to the 5-minute. And we'll just go back. Now, when you're backtesting, you have to understand, like, this level right here may not have necessarily existed when this price happened, right? So you got to make sure that when you're looking at a value, a level, you got to make sure it's got some historical testing. So in this case, it does. Like, it had some tests from both directions here, tested multiple times, blah, 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 blah. But if you're forming a new high, for example, and you see the price pop up, you can't really rely on that level too heavily because it's still forming. Okay, so I want to make sure that's clear too. If there's a peak in price, like right here, for example, somebody might come back here and say, oh, that was a perfect trade. But really what happened was when the price action got up here and turned around, that's what formed that level. So of course it's going to be perfect. Okay, so I want to highlight that as an important point. So, all right, so let's just look really quick. Again, I don't want to make this one super long. I just want to show you guys the basic stuff so you guys can kind of do this for yourself. But I do know repetition helps. So I've got my levels plotted here on the 30-minute. I didn't go to the daily. I could have, but just for faster trades, faster setups, I'm just going to kind of walk you guys through some stuff. All right. So right here, right, if we're just looking for this range, right, this is the zone that we're looking at. The candles are below the level here, so I don't really like that. This I kind of do. But if you're someone that waits for the candle closes, you're not going to get an entry on that one. But I like these entries. So at some point, this candle was here, right? So let me just go ahead and map it out. All right, and then a 1 to 5, or the upper threshold if it gets in the way, right? Because you don't want to necessarily hold through a resistance level. So in this case, that would have stopped out. Boohoo, right? Not a big deal. It's 59 cents, right, on a $400 stock. All right, then we come down here. These are a little bit high. I don't really like chasing. You could. It's just a little bit high up. This is $1.50 or $2 over the level, so we can skip that one. All right. This one, beautiful, beautiful risk, right? Nice and tiny. Okay, I'm just going to draw these really, really fast. I'm not going to go all the way up because obviously this one stopped out. So that's a stop loss of 46 cents. Okay, no other entries here. Maybe we grab this one. Kind of like it. It's a little bit close, but it's okay. We get a nice tight risk anyway. Doesn't matter. This one stopped out. So after we're stopped out, we can look for the next opportunity. We stopped out right here, so that means that this candle here could be the next opportunity, but we got to consider that wick. Let's just do it anyway, right? Just for the sake of drawing this stuff out. Okay, and then a 1 to 5. Obviously, we stop out for 60 cents, so not a big deal, not the end of the world. This one is within range, right? It's about 40 cents up or something like that. You can practice, right? That's what we're here for. This isn't real money. There's no pressure. So this one, it would have stopped out right there. Okay, no big deal. All right, and this is kind of the nature of the game if you do it this way, is you're probably going to get quite a few stop outs, and that's okay, right? So this one would have stopped out as well. And then, oh, sorry, I'm not trying to go too far here. I'm just trying to look and see for opportunities. My eyes are always trained to be over here, and then they kind of drift as I move the charts. All right. And then, boop. So we would have stopped out on that one probably. I'm just going to move this over here. And then, look at this right here. Right? This little engulf. I got to move this over here because it's skewing the price. You guys see this engulf right here? Let's go ahead and draw that. The wick is down here. Okay, so 1 cent or so below that. And then a 1 to 5, or remember again, that level, if that level gets in the way. All right, so 1 to 5 gets hit right here. And then we can sell into this level on the remainder. Okay, that is a $3.40 roughly. Let's just push it down here to the 1 to 5 just so we can get that exact number here. So 75% of the position would have been locked at $3. Okay. So we've got, let's just take inventory really quick and I'll show you guys why this is cool. We've got a 46-cent stop loss. Okay. And then we've got a 15-cent stop loss. And then we've got a 60-cent stop loss. And then we've got a 20-cent, a 49-cent, a 36-cent stop loss. And then we've got a $3 banger. Okay. And more importantly, we're set up for the next one. So we've got another opportunity right here. And I'll just keep walking through these. That's the whole point of backtesting, guys. It's just a lot of data. Mule, if you're watching this, I know you love this stuff, and I think you're going to enjoy this strategy quite a bit. All right, so this one would have stopped out on this candle. Okay, and then we got another opportunity right here. And again, if you're someone that doesn't really like the volatility or the noise, you can always just put your stop loss right below that level there. This one just stopped out, so I'm not gonna waste time drawing that one. However, right, look at this. This is stupid. Right? We don't know which ones of these are going to take off, but we do know that we can endure the small ones, or the small stops, and we do know that eventually something is going to pop off that level, or some level, right? All we're doing is we're just focusing the area in which we're looking, and we're giving ourselves the best possible opportunities to exploit that, basically. So here, what we've got is a combination, right? We've got the 1 to 5 risk reward, and then we can lock 75% of the position. And then we've got a 5 candle rule in effect up till here, right? So every single candle for 5 or more candles in a row has a higher low. You see the wick here, the bottom of the body here, the wick, and then the bottom of the body. So right here, as soon as price breaks below that, so bearish engulf right there, that would be your stop loss on the remainder of your position, or another chunk of it if you want to. And that would be a $2.68 profit. So you've got, right, from the last batch of orders, you've got this now. You've got 46-cent stop loss, 28-cent stop loss, and then a $2.68 profit. So this is net profitable as long as you do it the right way and you do it on stocks that make sense. So let me just go back to Wells Fargo here. Like I picked Microsoft at random here. It's not something that I'm, again, I'm not cherry picking this data. It's all real time. I see it when you see it. All right. Let me just take a peek at this. So for this one, I'm kind of trading it on the higher time frame here, and I got a higher fill, so I don't know. I might keep it, I might dump it. I'll decide here in the next 15 minutes, but I'm definitely not going to keep it once it reaches 61.10 because that violates my plan, and that's what this is all about. It's just how consistently small can you make your stop losses, because they're going to happen, right? You're going to have losses. Nobody can avoid it. There's not a human on this planet that hasn't taken a loss in the stock market unless you've never traded. And that's the goal, is not to avoid stop losses. It's to minimize the damage they cause. Okay. So in this case, I'm just going to let it play out. Let's really quickly, let's look at AMC, for example. I don't like the stock. I think it's garbage, but that doesn't mean we can't trade the hell out of it. And I will in this episode soon. I promise. I'm not trying to keep you hostage here. I just want to make sure that you guys understand these concepts, because I see a lot of people get hurt needlessly, and we can fix that. All right. So in this case, right, let's spot some opportunities. Right. So if I just go back here. All right. And again, you don't have to draw these perfectly. Just put them in rough spots where the price kind of turns around and you'll be all right in most cases. All right. All I'm doing is looking for areas like this. You see this engulf right here? That's it. That's all I care about. And I just sell into that. It's got a 1 to 2 risk reward. Easy enough. And then we come up here. We don't really have a color change where both candles exist, their bodies above the line, until we get right here. Right, we got 2 or more. That's color change above the line. We got our stop loss, right? Oh, sorry, 1 cent below that. And then there we go. Easy enough, 1 to 2.5. Easy. I didn't have to think about anything. I'm just shapes and colors here. And then we've got one right here, right? These are below the line, so we can't use those. This is above the line. So support has held, right? That's the concept here. Support has held, and we should see a push to the upside, but just in case we don't, we're we're going to minimize our risk. So in this case, just push, 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 push. Oh, did it really? Okay, I was going to say it popped right there. So we may or may not have got filled on that one. At which point we can try it again down here, right? And then that, obviously that case would have stuck pretty well. Stop loss, right? Yeah, well, 1 cent down, right? And these, these dollar amounts aren't that significant on AMC because it's a garbage stock, but you guys get the concept, right? It's kind of a universal thing. So back test, lose a bunch, right? Figure it out. It's this one right here would have been a loss. Okay, it would have stopped out right there. But guess what? You're not trying to trade these candles, and you're not trying to trade these candles, and you're not trying to trade these candles, and none of these are guesses. You're using a very mechanical system, and it makes life a lot easier. So we've got another engulf setup right here, and you condition yourself to be able to pick these out fast. It's so stupid and fast. We've got another kind of color change right here. And again, I'm someone who just likes the impulses. I like the premature entries on these, and that was a wick at some point. So what I can do is I can just put my stop loss right here or a little bit closer if I want to. And that's a stop out. And that's okay. There's no pressure here because, the small losses that I do take are going to get wiped out pretty effectively by the profits that I take. So right here's another color change. This is a little bit subjective. Maybe you grabbed one right here. Okay, maybe. Your stop loss will be right there. And you would have stopped out on the very next candle. And that's okay, because it's a 3 cent stop loss. Okay, we're not looking to do anything crazy here. We're just looking to minimize that risk, make it as small as possible. And that's it. As long as you get a greater than 1-to-1 risk reward and you can hit these consistently and you can pay attention when you're in the trades or have, orders in place and there's not a crazy spread, you might take a 3 cent loss. You might get an 8 cent profit. Doesn't matter. You don't control any of that stuff. So I will end this episode because I'm kind of repeating myself and it's a half hour. But if anyone has any questions at all about this particular strategy, let me know. This is not, I'm not saying this is the silver bullet for the market or any of that stuff because that's all BS. Nobody really knows for sure. But this is a very easy way to trade structure. So if anyone has any questions about this strategy, let me know. Join the Discord. Ask me here on YouTube. Doesn't matter. I'm on Twitter. I'm on Facebook. I'm all over the place. I'm a mess. And it doesn't have to be engulfing candles. You can use, EMA crossovers and all that good stuff if you want. You can use volume disparity. Doesn't matter, right? None of that stuff matters at the end of the day, other than how well it helps you be confident, identify your risk, and mitigate that risk. So with that said, I'm going to end this recording. Thank you all for watching, and I hope you have a good weekend. I'll see you guys in the Discord tomorrow for live trading at 9:30 Eastern, and then we'll go from there.